All right, welcome everyone. Um, so I made a tweet over the weekend kind of talking about ICT is a guessing game if you don't understand fair value gaps and liquidity. Okay. And I'm probably gonna do another video on this eventually, but just want to kind of talk about what I mean by this. Um, so when you first start learning ICT, a lot of the things that we see is, or a lot of the things that newer guys see, or just people in general, right? They'll go to the 1 minute chart, they'll go to the 5 minute chart, whatever. Okay. And they see a lot of fair value gaps. Okay. And they probably just got done reading a thread on Twitter like, oh, here's a fair value gap. This is a dingba, whatever, whatever. And then they go to the chart and they see all these fair value gaps and they get lost. Okay. And I can definitely see why. Right. There's so many fair value gaps just in this one little leg, right? 1, 2, 3, 4, 5. There's 6 fair value gaps in this tiny little leg. So the main problem people have is they're like, oh, what fair value gap do you use? Okay, and there's multiple elements that attribute to this, right? Time, liquidity. Okay, but I'm kind of be right before I teach anything. The important thing to know is that you want to be using fair value gaps at the right time. Okay, for example, the best times are London session 2 to 5 a.m. and then 8:30 a.m. to 4 p.m., right? Obviously, I could say 8:30 to 11 and then 1:30 to 4, whatever, but um, lunchtime price action is still going to be better than 9 o'clock at night, right? So, generally speaking, okay, before we talk about any of this or before you use any of ICT's concepts, you want to make sure that you are using these concepts in the right period of time, okay, which is the New York session, right? And then the London session, okay, that just makes most sense. And that's what ICT teaches. We know price is not a sloppy during those times. Okay, but once you get on the chart and you start looking for all these fair value gaps, you're going to be very confused. Okay. Now, I already made a video on my YouTube going over liquidity. Okay, but I'm just going to go over some more examples and show you, like, and I'll quiz some of you guys too. Um, like asking what fair value gap do you use here and why? What fair value gap's bad here and why? Okay, so um, let me just go over some examples. Okay, and the other thing you should probably understand before we go over this class is premium and discount. Okay, this is something I don't really draw a lot anymore in my live stream. Okay, but basically premium and discount, all it is, it's from a swing high to a swing low. It's just pretty basic for most of you I know, but this is premium discount. Okay, above the 0.5 premium, below is discount. Okay, so from swing low to swing high, we have discount and premium. Okay, you want to look for shorts and premium, longs to discount. Okay, that's just some background knowledge. I always tell people, I'm like, yeah, I I I have all these alerts and I have all these calls to my stream based off inversions, but I'm also using background knowledge too. Okay, like when I take a trade, I'm gonna say, oh, I'm taking this as an inversion, when there's probably other stuff I'm taking the trade based off of. Okay, a key example I was going over this morning, or this earlier with this guy. I was in a one-on-one. Okay, I was basically telling him that, like, Friday, for example. Okay, if we go to 9:30. Okay, right here. Um, this is Friday. Yeah, this is Friday. We had these kind of equal lows here. Okay, I think it was on the MQZ chart or the MNQZ chart. So we had these equal lows sitting down here. Okay. And when I'm looking for an inversion, right, I'm looking for some sort of sell side to be swept. And then, like, if I'm looking for bullish inversion, I look for that to be broken over. Okay. And half of these setups I take, like, dude, why does this not look right? That's so weird. I swear there's a 1 minute setup here or something. I don't know where it was. There was a very obvious setup after you took out equal lows. I'll just keep talking about this for now. Okay, but if we look at right here, okay, we know this is open. Okay, we have equal lows right here. No, it won't make a difference. Right, if we go and look at this setup right here, okay, this isn't an inversion setup, but it is a 2022 model. And we've liquidity swept. Okay, if you're someone solely just trading based off the model itself and not actually trading because you don't understand his other concepts, you won't understand that what this is, okay, right here is a Judah swing, okay? And typically we get Judah swings at open. So like when I call a trade out or when I call a play out or whatever it may be, or I teach on my YouTube, there's other things that go into this that I've learned from ICT. I don't really call out, but it's kind of just assumed knowledge, okay? And that's why I strongly recommend watching every episode. So like right here, I'm looking for an inversion because why? Well, we swept these equal lows, but it's also because this was open. This was a possible Judah swing, okay, which usually we get Judah swings at open. There's equal highs above, right, whatever it may be, right? I have all these other concepts in my head that I'm kind of just backgrounding from ICT, okay? And many people do not realize that, okay? And maybe I go in the 30-second model. Maybe I see a 30-second long setup here, 2022 model, okay? But I'm not on the 30-second. What I see is an order block retest here, so I long because the order block. Okay, or no, let's say this. Let's say I see Cameron's model here in the 15-second, and I long the 15-second. Well, I'm not only doing it because of Cameron's model, I also see this order block on the 1 minute, right? So I'm really using a bunch of different concepts. Okay, and even though I'm sticking to one model, I will see them line up with other stuff, and usually that's a good thing, right? So like understanding Judah swing, understanding the time of this setup where we get to Judah swing, whatever. Okay, that's very, very imperative. Okay, and that's trading. That's not using a single model. Trading is understanding, okay, there should be a Judah swing at this time. Look for the inversion model, whatever. Look for a break or whatever it may be. That's trading. Okay, if you just trade my inversion model and you're backtesting FxReplay, you're probably not going to have a higher win rate, as high of a win rate as I do, because when I'm using the inverse model, I'm cross-checking multiple charts. I'm cross-checking multiple confluences, right? So that's the one thing, and why some people have a lower win rate with the inversion when they kind of play it themselves, because they're not trading. They're just trying to take a model, okay? So that's the first thing I want to talk about. So the other thing is fair value comes from liquidity, right? There's a lot of fair value comes from the chart, but if people don't understand liquidity, okay, well then how do you know if fair value got to use? Okay, for example, right? If I showed you this chart and we zoomed way in, is this a good setup? Yes or no? Yeah, exactly. So Zaid said no. Okay, what? Can't see where liquidity is. So I would say no. You don't know if this is a good setup or not. Okay, all you see here is a fair value gap, and this is what ICT traders don't, or newer guys don't understand. They're like, oh, fair value gap's got to work for a short. Okay, I hate when people say, what do you see on the timeline? Because if they post this and they say, what do you see? Okay, how the hell am I supposed to see what I see if I can't see the left of the chart, right? I need to know if we took or purged some sort of liquidity or whatever it may be, right? I really have no gauge in the market if I can't see that. So now, if I zoom out a little bit and go to the 5 minute, okay, and I look to the left, we see we went over this high, barely displaced over it. We see on the 4 hour, we went into a 4 hour fair value gap, okay, all decent things to note. We see in the 1 hour, we had a small fair value gap as well, right here, right? We see all these things. Okay, now if I were to show you the 1 minute, and now we can use this fair value gap with some context. Okay, now would you say this is a good setup? Yes, it would be, okay? So that's the main thing people don't understand. They see all these fair value gaps, they're like, oh, this is a fair value gap, this should work, whatever it may be. Okay, but without context, you're never gonna know if the fair value gap is good or not. Okay. Also, like right here, okay, another very, very basic example. Okay, I know someone personally who shorted this fair value gap. Okay, again, if I zoom into the chart right here, does this look like a good short if you're very new to ICT? Yes, it does. Why? Because it's a fair value gap. Okay, whatever it may be. Okay, and they're like, oh, we should reject this. It's a fair value gap because that's all I know how to do. But again, given the context of the chart, if you look left, okay, and you see we took a low and barely space over it, okay, I don't care if this works or not. I'm going to have no FOMO. If we reject 100 points here, I don't care. This is not a good fair value gap because liquidity, okay, we already ran stops, right? If I go into replay mode and I place an order right here to buy, buy. Okay, and I have 10 contracts and I'm trying not to work at McDonald's, okay, and replay this chart. I'm like, oh, let's go. I don't have to work at McDonald's. Now I want a Lamborghini. So I keep holding, right? I want a Lamborghini. I keep holding. Okay, let me just go back for a second. Sorry. Wait. Bye. Okay, right. So I'm aiming for a Lamborghini here. Okay, but now I know I don't have to work at McDonald's because we're right up here, right? I'm up $1,000. That's my 2 weeks pay right there. So I'm like, okay, now I'll set a stop loss under this low because market structure is bullish. So where did I set my stop loss? Under this low. Okay, so now my stop loss is gonna be, can't even set a stop loss right here. This red line. Okay, and it's like, oh, I have really nice stop loss. I'm up a lot. It's probably not gonna hit, right? That's what I'm thinking. And then you play price. Okay. And I'm like, damn, I got stopped out. Okay. And when I get stopped out, what do you think my thought is, right? My thought is, oh, I got stopped out. I bet you were going lower. So now I short, right? And I play the market. And I'm like, damn, I stopped out. Then it went totally against me, right? So the reason why this fair value gap right here is bad is because if I already got stopped out here, right, and the market always ran my stop, okay, then why would this fair value gap work if we already stopped an idiot like me out? Okay, it's not, okay, because once the market runs stops, why would the market want to run stops again? Unless we get some sort of SMT or something, right? It's not going to want to run stops again. Okay. So again, once you have to think of your mind, if stops have already been activated, triggered, whatever the word is, do not trust any fair value gap after that till we get new structure. Okay. That's like the key thing. Okay, so like right here. Okay, why is this bearish fair value gap not going to work on the way back up? Well, we already took out all these stops, right? We already activated all these stops right here. So on the way back up, right? This is a fair value gap where people are going to be like, oh, this is a supply zone, I'm shorting. But we ran stops, right? Why would the market want to, if people got stopped out longing here and now they're trying to short, why would they allow this fair value gap to work for a short if that's what people are thinking, right? They're not. Okay. So that's just exactly what people don't understand. Okay. And a great example of like this weekly chart. Okay. If we look at the last week's price action, okay, we ran under this low. Wrong chart. We purged this low. Right? Liquidity purge. I already drawn out here. We took this low as well. Okay, so we've already taken all these guys, this smart money who's bought down here. We've just taken out their stops. So now they're thinking, oh, they took my stops, and now I'm gonna short. Right? So why would any lower time frame fair value gap, a bearish one especially, work right here? Right? They're probably not gonna have a good chance of working. Okay, and if we look at this gray box is the fair value gap, the weekly fair value gap. Okay, so if I go to the 1 minute And never mind, that is not the weekly fair. Oh yeah, it is. Okay, this gray box is the weekly fair value gap. If I go down here, okay, look at this. Right, we ran stops right here, this black line, and we create a low. Okay, so we create that low, and then we kind of displace back up. We don't really break structure, but we do inverse some of these fair value gaps. And then we don't make a newer low. Okay, well, why don't we have them to make a newer low here? Okay, why don't we have to run these stops again? It's because we already ran such big stops at this black line, and you can clearly see these black handles. This is probably smart money getting out of their position or getting stopped out or whatever. Okay. We already ran stops, so we don't need to run stops again. Okay, unless the market really wants to create some sort of SMT, I guarantee you all three indexes, if we're bullish, will not run this low. Or at least two of them won't. Okay, but like, next example. Okay, this is probably like a 2-minute inversion or a 3-minute inversion. Right, in my model, I teach you have to take the low before the inversion. Okay, well, in this example, you don't, because we already took stops here. We don't have to take stops here, right? Because we already took the weekly time frame stop. So like, this is a perfect example of my model, but it's also not my model, because this is the model where we did not purge liquidity, but we don't need to in this. Okay, and that's just kind of trading. That's not using my model. That's just understanding how the market moves and whatnot, right? So, there's a big thing that goes along with it. You guys are probably wondering, like, why does this inversion fail? Okay, and honestly, I don't really have a good answer for that. I would say this inversion probably fails because we had two here, and again, these two ones are just kind of sloppy. But the other thing is, like, when we do hit these really, really, really big higher time frame targets, what do you guys notice about price when we hit a really higher time frame target? Yeah, like the monthly fair value gap. What do you generally see when we hit a big liquidity? Yeah, exactly. So what Leo said, it starts accumulating, okay? And when price starts to accumulate, okay, this is going to happen where inverses don't work, right? We have to get consolidation before we expand again, right? So if I call out a big liquidity for the day in my premium, right? Generally I'll tell people if we hit that big draw for the day, I'll tell people, I'm like, hey, we just hit the big draw for the day. Okay, I'm happy, right? I don't need to see another big draw hit. Okay, once we hit that big draw like we did on Thursday, right? It's great that we got this move back up, but once we hit that big draw, I'm done, right? Because a lot of times we hit those bigger draws and those bigger stop losses that, especially like being this one on the weekly time frame. Okay, when we hit something like this, so many people are getting stopped out, and that's going to cause smart money to battle. Okay, it's like a war, right? They're going to reverse their positions. People are going to try to short now, right? And what happens when all that happens, right? When these algos are battling out down here at this major sell side, right? Institutions get stopped out. Okay, retail is trying to short here because they see, oh, big level breach, whatever. A smart money going along here, right? That's going to cause this accumulation. And although this technically should have worked, okay, it's not, because we hit that bigger time frame draw for the day. Okay, so another reason why fair value gaps kind of don't work is, have we hit that higher time frame draw? Okay, and sometimes it happens right at open. Sometimes open will kind of, it's the 9:30 open is not news, but the 9:30 open, okay, it's like the market's alive, okay? I don't know how to explain this, but sometimes it feels like the market's alive at 9:30, like it really, really wants to go hit a higher time frame objective. Like, I can't explain it, but sometimes there's like these really obvious equal lows at open, or I'll see before open. Okay, I can't really find an example in the chart, but sometimes I'll see like these really obvious equal lows from like London session that are just left from London, and I'll get on my live stream, and before the market opens, the market kind of just lollygags around, and I'm like, all right, I bet you open is just going to pump right to these equal lows, whatever it may be. And it's like almost like when 9:30 comes, price, if there's an obvious objective, keyword, it has to be obvious, like really obvious equal lows. Okay, the market it like comes alive in 9:30 and it wants to hit that objective. Okay, I can't explain it, but it's like the 9:30 is like a news, except it's not, that wants to hit a price objective. Like it has such a motivation to hit a price objective. If there's no obvious liquidity, if we're not in a market maker buy or sell model, or there's no equal lows or equal highs, we will not do that open. Like that's when we usually get consolidation. But if we create a really nice buy side or really nice sell side in London sessions, such as like we create like multiple equal lows, okay, I promise you that 9:30 open will just accelerate towards it. Okay. It will not accelerate towards it at 9:29, 9:28, 9:27. It will accelerate from the times of 9:30 to 9:45 generally, okay? Because, again, it's just, it comes alive. It likes hitting those targets right at open. There are a few instances where it will hit before open. I'm pretty sure it has to do with the news, though. Like if there's news at 10 or news at 8:30. There's something ICT said about that one time. I forgot what he said exactly, but generally, if there's a really obvious target from London, 9:30 to 10 o'clock will hit it. Okay, and then at that 10 o'clock candle, 10 o'clock to 10:10, whatever it may be, we'll get some sort of reversal or whatever. The days I don't see that 10 o'clock reversal happening are the days where we have a really higher time frame objective, like 100 points down. Okay, but if we have a really obvious London objective, like equal highs or equal lows, and 9:30 opens, hits it, we'll start to reverse 9:50, 10, 10, 10, 10, and then that's when we recreate those like little buy and sell models, right back to the opposite side or whatever it may be. So that's that. Okay, if we go back to like the 15-minute, okay, just show a couple more examples. Also, another thing I do want to point out, when we do hit these major sell side points, okay, never trust the first low made in a fair value gap to be held. Okay, that's another really good point. Okay, a lot of people think this is going to be the, like, oh, they'll be like, oh, we hit bottom here, right? Sell side, monthly fair value gap. This has got to be the bottom right here. And the long here. And what they don't understand is, yeah, the long, and they'll see, oh, we have buy side here. So a scalper like me, I'll sell all at this buy side. I'm not holding longer than that. Okay, I'll sell all here. But a lot of times we do hit these major objectives. We create that low inside the fair value gap, and then we create a new low, then we bounce up. Okay, and that just wrecks a lot of people trying to get in these long-term positions, because a lot of traders, they'll go for these like 15 million R trades when we get here, and they'll be like, oh, really obvious sell side hit, whatever. Then they'll go to the 15-second chart, and they'll be like, oh, I'm going to find a 20R trade here. This has got to be bottom. And then what happens? We'll hit the internal buy side. That's when I sell, okay? And then we'll create a new low. Then we'll go up, okay? So if we do hit a higher time frame objective, never trust that first low in the fair value gap to be the actual low, okay? Generally, it won't be, especially if you hit like an obvious buy side here. And yeah, that's the other thing for now. Is there anything else I want to talk about right now? Let's see here. Again, I think I've made my point with liquidity. Did you all understand, like, when I was talking about fair value gaps earlier, did you all understand, like, why you need more context? Like, if I point out a fair value gap like this without any context, like, new IC traders think, okay, you short it. Okay, but without the context, you don't know, right? You all understand that part, right? All right, because that's the big point I want to get across, and that's the thing. That's the thing new people struggle with, right? So think of a fair value gap. Think like, what if, imagine Romeo tweeting, what do you see? Okay, now if you're Romeo, you're doing this for impressions. Okay, you don't care what people see. Okay, you probably post it, then mute the tweet anyways. But think about like what Romeo sees, or Romeo posts, right? If you post it and say, what do you see? Okay, you don't know because you can't see the left of the chart. Now, if I zoom out to the left of the chart, what do I see here? Okay, I see, honestly, not really good short. I see buy side right here personally. So to me, I would not short this. Maybe if you got like a lower time frame conference set up, or like maybe if we close below this, I'll be like, okay, this kind of is bearish. But I wouldn't short this one because to me this looks like a market maker buy model. Okay. Right, has that really obvious curve. So I'd call this buy side, so I wouldn't take it. Right. But without that higher time frame context or that higher time frame understanding, okay, you really, really don't know. To be honest. All right. Well, that's really the point I wanted to get across. It's been 25 minutes. Does anyone have questions? Maybe it'll last us 5 more minutes. Uh, Very funny, Cody. This will be recorded. You can just watch this. How am I doing a Discord eval? I don't know yet. I'm gonna buy it probably tonight, and um, I'm gonna make a separate channel. Okay, and you guys have got to tag me, but someone's gonna suggest a play with a risk reward box or whatever, and then I'll ask people if more than 50% agree in taking it, I'll take it. Um, and I'll just do it like that. So I'll create a separate channel. Someone will suggest a play. I'll kind of talk to my live stream, be like, "Do you all agree we take this on the eval or whatever?" And then I'll see if it works. And I don't care what kind of setup it is. If more than 50% agree, I'm taking it. I don't care if it's a version. I just want to see if you guys can pass an eval count and I'll come to a consensus. I'll probably do like a 50K count. All right. So, yeah. So, Metsy, if you want to suggest some plays in the channel and people agree, I'll take them. Again, I don't care if it could be based off a day's market structure. I don't care. As long as they're like, as long as you can show me the take profit and stop loss, I'll take it. All right. So, when am I rushing to get in for yeah? Usually open, I'll rush to get in for value. Yep, because when it's very volatile, I'll rush to get into fair value gap because sometimes you just don't retrace. But if price is moving a lot slower, I'll sometimes just try to wait for the retracement. Yeah, probably Apex. Yeah, I'll do micros for sure. I'm not doing minis when people tell me what plays to do. I'll literally probably do like 3 micros and see what happens. So for the eval count I did last week, okay, it was a 25K count. I was executing on stream. I got it from 25K to it's currently at 25.6K. Let me just log in and check. I'll probably let me see this. It's currently sitting at 25.569K. So I'll probably trade this Monday, Tuesday, but I'll not trade it again until Friday. I'll call out price Wednesday. I probably will demo trade Wednesday and Thursday, like always, and then Friday I'll trade after NFP. But I'm gonna keep trying to take Cameron models on this, probably. And again, we'll see if we can pass the count. Yeah, I do trade Mondays. News every day is good. Cause there's a lot of setups on it. Has it, and because there's so many setups, generally it's gonna have a decent win rate because there's a lot that work. I don't know. Just stick to one strategy. I'm just doing it for fun. All right, I think that's gonna be it for now. I'll see you guys later. This will be recorded and uploaded on YouTube. So, yeah, I'll see you guys later. Peace. Let me know if you have any questions. Remember, 50% off a lifetime if you want. Just DM me, whatever. And I'll see you all next Sunday. Goodbye.